Hey, Joe Phillips here with Focus Real Estate at Central Park Scoop. I am here in the back of one of our beautiful new listings we're about to put on the market today. Nicole, our photographer, is nice enough to just record me for a few minutes with this video. And what we're going to talk about is the real estate market. I get asked all the time, right? People love to ask, how's the real estate market? Well, that's a very nuanced question. It's like, how's the stock market? I mean, some parts may be going good, some may be going bad. So I'm just gonna give you a little update on the real estate market based on the June DMAR statistics. And DMAR is the Denver Metro Association of Realtors. So one thing I like to do is look at the most recent stats and see if it just jives with what I'm experiencing here in Central Park with my own clients. And in this case, it does. I'm gonna give you a few quick highlights in this video. And then I just wrote a full blog post with all those DMAR stats and the DMAR full report if you're the type that likes to dive in and really see all the details yourself. So, how is the market doing? The big headline is it's balanced between buyer and seller. Like in the past decade, especially 2021 and earlier, it was really like sellers had all the power and buyers were just kind of getting abused, honestly. And now that has come back into balance. Interest rates are a little higher. The cost to own homes is higher. There's more inventory. So all of that has just led to more balance. That means during price negotiations at the beginning, both sides typically have some power and leverage. During the inspection period, again, balance, both sides have some leverage. It also, some power, excuse me. It also means that homes might not sell right away. Sellers really got used to things just flying off the market in the first weekend and counting how many offers they got. Now it may take a few weekends, it may take a few months to get the home sold. One thing that sellers can really do to help themselves is get the property looking great before they put it on the market. So due to that balance of power now, move-in ready, condition of the home matters a whole lot. So we're at a new listing that we're about to put on the market, and I'm just gonna show you a few examples of what I'm talking about here. So the owner of this home was smart to listen to our advice and invest in making the home shine. So Nicole, if you can just pan around the backyard is a huge asset for this house in the low 700s in Central Park. It's very rare to have one this big. And they took the time and the money to stage it, prep it, do lawn care, trim the trees, redo the mulch, all those things that make it shine. Whereas 5 years ago, you might have been able to just throw it on the market. It was gonna sell either way. I would have still given you the advice to make it look like this, but you didn't have to listen, honestly. Now you really do. So this is one example. Let's go inside real quick. I'm gonna show you a couple other examples. I wanna show you examples of the types of smart, positive return on investment type things that we help our clients do. So we just had them put in some new lighting. Didn't have to go over the top, didn't have to go crazy, but new, nice lighting throughout. Brand new carpet on the stairs, upstairs, down in the basement. It had just seen a lot of wear and tear. It was time for refreshing that carpet. They listened to us and it looks great. Lastly, on the outside of the home, they did the exterior paint a few years ago when we had a hailstorm and the new roof. They got all those projects taken care of. So now when somebody comes through the house, it is move-in ready, not a project house. If you have a house that's considered like a project house, buyers are already squeezed by interest rates, by the cost of their groceries, their gas, everything. They're now coming through homes and looking at, oh, okay, I'm gonna have to update this, that, the hot water heater's old, I know that's gonna break, this is old. They're doing all that math way more than they used to. So you need to have it move-in ready, priced right, and then it's still gonna go fine for you. The last point I would make about the market is when I think of how is the market, it varies by price point. So on, say, the more the starter type zone, the homes that are being bought by the people that have not bought a home before, because it's a starter home, that price range is a little tougher and taking a little longer to sell. Those people have never owned a home. They didn't get any of the equity appreciation run-up that people have benefited from that have owned homes for a while. So all they have is a tough interest rate, an unaffordable situation. It makes that segment hard. There's not a lot of buyers. The middle of the market is going really well. It's going a little bit faster, especially for detached single family homes. Those buyers have benefited from probably owning a starter home that went up in value a ton. They can put the equity into this next home. They can afford this next home. Middle of the market's going good. Really high, 1 million, 1.2 plus, really higher end stuff. Again, a little bit slower, a few less buyers running around ready to act in that price range right now. So those are just 3 points I wanted to make about the market. It's balanced, move-in condition is super important, and it varies by price point. I'm gonna put the whole blog post below with more details. And if you want to jump in and get some help in Central Park, whether you're buying a home, renting, property management, again, my name is Joe Phillips with Focus Real Estate. I'd love to help. Thanks.